Okay, welcome to this section on alternative investments. Alternative investments is not that many questions, so you should be very careful about overspending your time here or allocating too much time to this reading. That does not mean ignore it. Questions here should be relatively the easier questions on the exam, but again, if you do, you're talking about 10 questions. So 10 questions coming out of this sections. Remember, these are just gauges, so they might ask you 8 questions. They might actually ask you 12 questions, but they're equating it to approximately 4% of the exam. Now, this reading on alternative investments, what you learn here follows you through to level 2, and then again follows you for the most part into level 3. Now, of the alternative investments, there are 6 different alternative investments that are discussed, of which I am going to recommend that you focus on 3 of them primarily. You've got hedge funds as one form of alternative investment, private equity funds, real estate, commodities, infrastructure assets, and other. I would focus on other. No, I'm just kidding. I wouldn't focus on other. Come on, guys, lighten up. I'm joking with. Which are the 3 that I would really focus on? I would really focus on real estate, commodities, and hedge funds. Those are the ones where I think you're going to get most of your questions out of. And of course, they could throw a question out on private equity funds. Other, I would forget about. Other means like other types of alternative investments like, I don't know, automobiles, antique furniture, stamps. Don't think you're going to be seeing questions about other. So and what about infrastructure assets? Maybe one question if you're lucky. But I would focus definitely on hedge funds, real estate, and commodities. Those would be my primary alternative investments that I would focus on. Private equity funds and infrastructure assets as a second or a secondary component to study, and then forget about other. All right, so that's what we're going to do. We're going to focus on the hedge funds and the real estate and the commodities, and then I'll briefly mention what you should focus on, private equity and infrastructure assets. Now, why do we even include alternative investments in the CFA program? Well, the reason for that is because traditional investments like stocks and bonds can provide you with a portfolio, but a lot of times people want to create a well-diversified portfolio. And a well-diversified portfolio is not going to be made up of just stocks and bonds. So what we want to do is we want to include other types of investable assets in our portfolio so that they don't necessarily have a high correlation with the returns of stocks and bonds. So that is why we consider these alternative assets or alternative investments. And one thing that you should know, which is to compare alternative investments with traditional investments. When we talk about traditional investments, we're referring to stocks and bonds. Okay? And if we actually compare traditional investments with alternative investments, we'll see that alternative investments basically have the following characteristics. Boom, boom, boom on an index cards. Alternative investments generally have less liquidity in terms of the assets that they're holding. Alternative investments also tend to be more specialized in terms of investment managers. So for example, if you're investing in a real estate investment trust or real estate, the investment manager has expertise in that particular area. Whereas if you buy traditional investments, the person could buy you stocks and bonds, but they don't necessarily have an expertise in both. But with alternative investments, the investment managers are more specialized. Also, with regard to alternative investments compared to traditional investments like stocks and bonds, alternative investments have less regulation and less transparency. They also have different legal issues and tax treatments, which could come to your advantage. And also, alternative investments exhibit more problematic and less available historical return data and standard deviation or volatility data than traditional investments. So there's less historical return data available. So just understand again some of the differences between traditional investments like stocks and bonds and alternative investments on the other. And as I said, they basically mention what are the different categories of alternative investments. And again, the 6 of them that they focus on are hedge funds, private equity funds, real estate, commodities, infrastructure assets, and other. So really don't worry about other.